Hello everyone, I'm Robert from bobthetradergpt.com. Today, I want to share what I believe are 5 major warning signs that every investor should be watching. First, geopolitical tensions remain elevated as U.S. military operations against Iran continue. Extended conflict increases uncertainty and keeps pressure on energy markets. Second, oil prices have surged toward $100 a barrel. Higher energy costs can feed inflation throughout the economy. Third, artificial intelligence spending is exploding, but many companies are still struggling to demonstrate meaningful financial returns on those investments. Investors are beginning to ask when the payoff will arrive. Fourth, we've already seen sharp market reactions to disappointing technology earnings. The market is becoming much less forgiving when expectations aren't met. Finally, my BOB technical indicators are showing increasing weakness in key markets. Gold has broken lower, and the Nasdaq is showing signs of heavy selling pressure. I'm not predicting the future, but I am saying the risks have increased significantly. Stay disciplined, manage your risk, and always trade with a plan. Take a look at this IBM chart. The first thing that jumps out is the massive earnings gap down, also known as a flash crash down. I think the broader stock market missed the significance of that flash crash. Based on current reporting, the decline appears to be the largest single-day percentage stock price decline in IBM's 115-year history. It exceeded even IBM's loss during the 1987 Black Monday crash. That wasn't just an ordinary decline, it was the market rapidly repricing IBM after its earnings announcement. Now here's what really caught my attention. Several trading sessions have passed, and IBM has not recovered. Instead of bouncing back strongly, the stock has moved sideways near its lows. To me, that tells an important story. The market is saying we're not convinced yet. When a blue-chip company disappoints investors, confidence isn't restored with a single press release. It has to be earned through stronger execution and future results. Technically, IBM remains below its major moving averages, and the recovery has been weak. If this support zone breaks, the chart could develop a second bearish leg lower. That could put IBM in the $100 range, a shocking haircut in IBM price, something investors will not easily forget. Some might even say it's time to head for the exits. Maybe even confidence loss from major blue CHP hedge funds. Or even worse, could IBM be removed from the glorified spot in the S&P 500 index? That would be a catastrophic event for the famous big blue tech stock. But hey, stranger things have happened, and in the AI age we are in, anything is possible. This is like a warning sign for overpaid, bloated CEOs flying around in their corporate jets. No one is safe from scrutiny in the age of the equalizer AI. CEOs be warned. AI can do the job of a CEO, maybe even better, for less pay and better performance. That is something I'll be watching closely over the coming weeks. Now, does that mean another sell-off is guaranteed? No. But the current chart suggests investors are still cautious, and IBM needs to prove that its growth strategy can deliver. The broader lesson goes beyond IBM. As AI spending increases across the technology sector, investors are becoming more demanding. They are no longer rewarding companies for AI ambitions alone. They want measurable revenue growth, stronger earnings, and clear returns on investment. Companies that fail to meet those expectations may continue to face significant market pressure. This is another BOB market alert. Think like a fund manager, protect your capital, and let the charts tell the story. See you in the next BOB report.